Damn it. Hey, what's going on, Strat Soldier here. Technical difficulty, but we are here. Heck yeah, awesome. Terry Baker is in the house, and looks like we got the Creole Kid. Heck yeah. Let me do a little bit of Twitters here. Good evening. How did everybody? Did everybody have a good weekend? I hope you did. Let me see here. Hold on. Live right now. Hold on a second. 100% free. The Strat. My weekend was pretty good. Busy but good. And then so we got all the super chats that we needed for May, and I said I would do a free coaching session, Q&A about the Strat on Sunday. So here I am, Sunday. So we're not really going to do a bunch of watch list stuff. We can talk about watch lists, but this is more about questions. What's going on? Marlon B is in the house. Heck yeah, I'm glad you're here. Let's get to the charts. Again, just want to answer questions. Bam. Answer questions about the Strat. What you guys have questions on? One big question that I had with one question that I had with oh shoot, what's his name? Anyway, a couple weekend shifts ago, I was talking about what is actual exhaustion risk. What's up, Ryan? How you doing? Let's go to the 60s. Actual exhaustion risk. There's another group out there that calls exhaustion risk every 15 minutes, and it is exhausting. So, exhaustion risk is, I'm trying to think of one that was all the way at the highs. Let's go to, VeriSign, VRSN. VeriSign, all the way at the tippy top. All right, this is the month. There is no more stops to be taken out. This is at all-time highs. This is true exhaustion risk, okay? This is exhaustion risk. There's no more stops to be taken out. They took out all of these guys. They took everybody out to the downside, and they took everybody out to the upside. That's exhaustion risk, all right? That's actual exhaustion risk. When things are, let's see. Let's go back to SPY. SPY, not at exhaustion risk yet. All right, why? Because there's a lot more room to go. All right, it doesn't get to all-time highs until 6/13/27. We're almost there. We're almost hitting magnitude on the month, which is great. But I guarantee this other group would be like, oh, it's at the top of the broadening formation. It's exhaustion risk. Okay. Rob did talk about two things. He talked about broadening formation risk, and he also talked about, let's drop down to the 15 minutes. He talked about broadening formation risk, and he talked about time risk, okay? Broadening formation risk is, for example, you are on the 15 minute. It's at the top of the broadening formation on the 15 minute. We are either it's going to continue to expand or it's going to reverse and go to the downside. What we don't want to do is look at this thing and go, it's exhaustion risk, time to start scaling out, and then it continues to move up, all right? And then you miss out on all of the action to the upside because you were only looking at the 15-minute chart only looking at one time frame and calling it exhaustion risk, which is not. It's not. It's broadening formation risk. We have an argument there. And then time risk. Time risk is when there is time risk is when we know for a fact with time frame continuity. Let's go to all the charts. So it's easier to explain that way. We know for a fact the month starts over once every month, every 30 days, all right, or whatever it is. I know it's less than, I think it's like 25 days or something like that. Anyway, it starts over every month. All right, this time frame starts over every month. The weekly chart starts over 4 times a month. All right, the daily and the 60s start over every day. All right, so with time frame continuity, what we want to know is how much time do we have on this trade. All right, now let's go to the let's say the weekend shift watch list. Oh shoot, let's go Costco because I already cleared it out from yesterday, from last week. I already cleared it out. You can say, okay, it's inside and up on, or it's actually Rev Strat, inside bar scenario 3, Rev Strat on the week. How much time do I have on that trade? All right, you can look at the daily chart and go, okay, I got 2 days left. Where this went in force, I got 2 days left on this trade, Thursday, Friday, and it went well. It went really well for those 2 days. But after those 2 days, that's that's how much time you have left. That's the time risk. After those 2 days, this week is done. The week is over. The one bar Rev Strat is done. It ends. Okay. And now on your daily chart, if you're looking at your 60s, and you take a reversal and it's only got 2 hours left to go, that's how much time you have left on that trade. 2 hours. All right. So time risk. So we're always looking for broadening formation risk, and we're looking for time risk. But to use the word exhaustion risk means something completely different. Exhaustion risk means there are no more stops to be taken out, period. Either to the highs or to the lows. So we have to be careful, and our words matter. Things matter, especially with these strat terms, okay? So we want to use the right terms at the right time. Well, oh, Mr. F2 Rev, what's going on? We want to use the right terms at the right time. There's other people using, some extra weird terminology that's not necessarily the strat, and they're confusing the new people. After you learn the strat, after you learn the basics of the strat, and you get pretty good at it, you can add anything else you want. All right. For example, I added this money flow index. Just gives us something else to look at because this measures price and time. Measures price and time. So you can see how price is moving up. All right, that's great. But they're really not buying in it. The volume is pretty steady. Like they're not really just getting in. They're not full porting into this stuff, to make a little joke there. But they're not full porting into this stuff. They're just like, they're not getting out, but they're not really, everything we got. Let's get like this right here. That's beautiful. This right here. That was great. Just be careful. Be careful. Anybody got any questions about the strat? You guys are pretty. What's up, Terry Baker's in the house? Back up, Terry. Back up, Terry. Marlon B. Ryan, Mr. F2 Rev, and the Creole Kid. What questions you guys have about the strat? And then get some people in here if you can. just so it's a good coaching session. Let me see here. Questions about time frame continuity. Does it have to be 2 up on the month for it to be full time frame continuity to the upside? No. It could just be green on the month. Let me see if I can find one that's inside and green. Let's look at Dow. Dow Jones is having a hard time. All right, Dow Jones is finally 2 reversal back up on the month. That's good because they were having a hard time. Let's go to. I'm trying to think. One was on top of my brain here. Let's go to monthly signals. because I was looking down those. Trying to find an inside month. There we go. GD, General Dynamics. All right, General Dynamics. Now, there's definitely buyers in here. It's not 2 up on the month, but it's green on the month, green on the week, green on the days, and green on the 60s. Look at those 60s. That's 60s. That's awesome. That's awesome. So that's the kind of trades you want to be in. And this is full-time. This is still full time frame continuity. It doesn't have to be 2 up on the month for it to be full time frame continuity. And to refer back to something Terry Baker does, it doesn't have to be green on the quarter, green on the year. Now, what Terry does is he wants to see green. He wants to see 2 up on the year, 2 up on the quarter, 2 up on the month. Like, he ain't messing around. He's filtering the best of the best. That's what he wants. I ain't messing around with nothing else. He wants the best of the best. Decoupling, okay. Yeah, he wants the best of the best. So he ain't messing around with no junk. And but it doesn't have to be green on the quarter and the year. Just at a minimum, the month. You definitely want the month. And if the month is inside, you definitely want 2 up on the week. All right, that lets you know, hey, at least they're buying on the week. That definitely protects us from that domino effect stuff. Rob never talked about that. So what these other guys will do is they'll tell you to get in on a reversal on the 60-minute. Actually, they'll tell you to get on a reversal on the 15-minute. That hopefully triggers the 30. That hopefully triggers the 60. That hopefully triggers the day. And as soon as it goes 2 up on the day, they say, oh, it hit the target. We got what we wanted. Time to scale out. That's what they tell you. Okay? In actuality, what you should be doing is once it goes 2 up on the month, you're in. Excuse me, once it goes 2 up on the day, you're looking for reversals to get in on that, because that's also reconfirming what we're seeing on the week, that there's buyers on the week and buyers on the month. And if there's no reason to get out, there's no reason to get out. Don't get out. Decoupling. I always skip decoupling. Decoupling is why it's important on Tuesdays, so we can all talk about, and also can we talk about levels of reclaim? Yes. So when the month starts, the month and the week are going to be the same price until the second week and Tuesday of the second week, or the second hour. And then you'll have 4 separate openings. All right, the monthly will be have its opening, the week will have its opening, then the days and the 60s will have 4 separate openings, and it just gives us more evidence that yes, they are really buying this. For example, Oracle, they're really buying this. Now you got some divergence here because the price is going down. Or it's moving down, and you can see the money flow index. All right, they're not really getting in that anymore. So we'll see if that actually starts dropping. But full time frame continuity to upside still. Could be a 2-2 reversal back up on Monday. We got to watch that. The futures are being ugly right now. So I used to get caught up with Rob a lot. I'm in Rob's live room, and I'll go, Rob, Oracle's full-time frame continuity, it's amazing. And Rob would be like, hey, it's the 3rd of the month. It's May 3rd. Like, just hold on. The month of the week are the same price still. They had the same opening. You gotta wait. You gotta wait till the next week on Tuesday, the second hour, and then that gives you 4 separate openings. All right, that gives you a different opening for the week. And then your days and your 60s will be different. And again, it's just more evidence. And then levels of reclaim. Levels of reclaim are important because what they are, let's see, these scenario 3s. There used to be a couple groups out there and a couple people that would mark out all these scenario 3s and then draw broadening formations off of every scenario 3. And what happens when you draw a bunch of scenario 3s? You get this. You draw broadening formations off of every scenario 3, you get spider webs. All right, all over the place. Now, if that's what they did, and that was their That was their bread and butter, so I mean, it worked for them. But for you, let's see here, clone this horizontal line. I suggest you use these levels of reclaim. What you want to do is just mark out where these scenario 3s are. And then in TrendSpider, you can actually use the chart, is it candle pattern? You can use the candle pattern tool right here to look for scenario 3s, outside bars. Yep, there it is right there, outside bars. And it'll mark every scenario 3. So you don't necessarily, so it just, again, further simplifies what we're looking for. And what we are doing is we are tracking where the price is going through previous broadening formations. All right. We want to know where it could possibly go. I just learned something really interesting about the Fibonacci's. Everybody loves Fibonacci's. Now, the Fibonacci sequence, if you want to know, the Fibonacci sequence is interesting. So if you take the first two numbers are given to you, 1 and 2, and if you take 2 plus 3, you get 5, and then 5 plus 3 is 8. 8 plus 5, 13, and so on, all the way up till was it 377? All right, right now it's infinite because we got computers, but back then 377 was it. And so actually it was a word problem. It was a word problem that Fibonacci came up with that. It was a word problem about pairs of rabbits. It had nothing to do with markets. It had nothing to do with price action. It was about pairs of rabbits. That's hilarious. That is freaking hilarious to me. Oh, what's up, Real Talk? Our Army vet, hello, awesome, good to have. I'm glad you're in here. I'm glad you're in here. Heck yeah. I'm glad you're here. Thank you. Says love the content. Thank you so much. Thank you for being here. So anyway, and then so Fibonacci's. Everybody loves Fibonacci's and how it makes so much sense. You know, these are crazy major retracement levels, but when you look at the history, it was created back in 1202. It had nothing to do with the stock market. All right. Then what they do is they pair that up with the golden ratio. The golden ratio. You got to look at this golden ratio. That's where that's where all the retracements happen. Well, the golden ratio was actually created a millennium before Fibonacci. The whole Fibonacci number sequence came about. What they did is they combined the Fibonacci number sequence and the golden ratio. They combined those two things to come up with the levels, the special retracement levels. This is where it could go. Now, because institutions use those, and it's widely known that these Fibonacci's levels that's where the price could go. Institutions use them, everybody uses them, so that's why people look at them. But in reality, it's just numbers. It's just numbers. It's a bunch of made-up numbers that they said, man, that's kind of interesting, huh? That's it. It's a bunch of made-up numbers. Let's see here. Let me draw. Now, it's good. Now, I know the people are going to be like, no, man, that's not how it goes. Yeah, okay. Let's see here, Fibonacci. Let me see. Give me all these. I use that for the 50% range, but let's do them all. Let's do all of them. Hell, here's a 6.8. Here's the 6.18. Everybody loves to talk about. Let's do all of them. All right. Let's turn on all the fibs. And this is, yes, I'm getting in. Now, Terry, I'm getting into levels of reclaim. Give me a second. He's like, I asked about levels of reclaim. I asked about no fibs. So right here, this is what they'll do. All right. Yep. See how it came all the way down here and then moved all the way back up in here and it moved back down. Isn't that crazy? Isn't that interesting? See how I had 1.6 at the Momo hammer and it just kept going? It's just numbers. All right, these are just numbers. These have no bearing on where price is going to go. All right. Now, if you ever seen Rob's greatest story ever sold, the greatest story ever sold. If you haven't seen it, it's on Twitter, it's on YouTube. I'll retweet it. But he says what Fibonacci actually did was, all he did was figure out that price can go up, down, and sideways. And he said, okay, so if you, and also there's decimal numbers in here. If you take astronauts and put them in a rocket and shoot them to the moon, and you ask those, you ask your mathematician, okay, how much pressure can these astronauts take? What's going to take them to get in there before, how much pressure is it going to take inside the cabin? Well, how do we keep our astronauts alive? And he's like, well, it's actually 0.165986. Yeah, you got dead astronauts. So I'm paraphrasing there, but it's hilarious hearing Rob say that. But it's 100% true. These are made up numbers that someone said, okay, we're going to take Fibonacci sequence, we're going to take this golden ratio sequence that was made by the Greeks, we're going to put them together, we're going to come up with these really cool numbers that we can put on the charts and we can use to figure out where price could go. All right? Now, people have made a lot of money with Fibonacci's. All right? I want to say that. People have made a lot of money with these. What are they really doing? They are looking for levels, key levels where the price could probably go, and then once it starts moving back in, retracing back to the other side, they're deciding it's above 0.78, I'm getting in. That's what they're doing. All right, so it's just a little bit more confidence for them to get in. Let me get this crap off the chart. Bam, it's off the chart. What would be a lot more effective, what is a lot more effective, is looking at these levels of reclaim. Why? Because this is quantitative. These aren't made up numbers. This is quantitative. We know these scenario threes on a smaller time frame are fractal triangles. All right, we know these are broadening formations on a smaller time frame. We know the price, we know that they're going to test the lows, test the highs, test the lows, test the highs. Once they get it through one of these broadening formations, they're going to start working it back to the other side. All right, the sellers got what they wanted. The buyers say, okay, it's time for us to start stepping in. There's your rev strat, 1 bar rev strat, a 1-3 to the highs. All right, and then once the price gets into this right here, this is your level of reclaim. You don't have to mark the top and the bottom. I just do that so it gives us, it's a little bit better visual, and I can see clearly, here's a target and here's a target. That's where I want price to go. So if it hits my first target, no reason to get out. It's still good. All right, the price continues. It's inside weak. All right, so I chill. I don't do anything. 2-1-2 continuation up. I want to see if it gets to 157, and it did. It gets past that. All right, now the price is getting into, will it get up in here? Will it get up into 167? Once it gets to 167, now I want to see if it can get to 182. All right. And I'm looking at all of the targets. Let me move this one down here. I'm looking at all the targets that in that range it could possibly hit. That's a lot more effective than looking at Fibonacci lines. This is quantitative. You can measure this on the chart. All right, we're not talking about hitting 0.68, 0.618. We're not talking about that. We're talking about getting back through this range, and you have an actual target of 157, which is it's above there now. So the simplest way to look at this, is take your broadening formation and then look at these as like 10-yard lines on the football field. All right, that's the easiest way and the funnest way to look at these levels of reclaim. Now here's your line of scrimmage at 138. Once you have an actionable signal, hike. That actionable signal goes in force. The buyers got the ball. They're running the ball all the way. They're trying to get the ball all the way up to 157. Actually, 150. I keep saying 157. 156. The buyers are trying to get the ball all the way up to 156. Once they get to 156, they're going to try to get to 167. That's the next down. That's where they're trying to get next. All right, and then they're trying to get to 171. Once they get to 171, they're trying to get a touchdown. Touchdown's 198. That's the touchdown. All right. And everybody's screaming in the stands, and You had confidence to stay in the trade the whole time because it kept moving through previous ranges. Now, let's just say it gets to, let's just say futures are down right now because the downgrade on credit, credit downgrade. All right, so we know that. We know that's happening. Now we're back through here. Let's just say tomorrow we open up. Let's get some fake candles on the chart. Now we get through here. We say tomorrow we open up down, and then it keeps getting nasty the week after. All right. Let's say I don't want to wish nothing bad. I don't want to wish nothing bad, but the future's looking ugly. Let's see here. Let's just say it does this. These are going to be red. Make them red. Make them red. Okay. Boo. Puke. All right. Bad. Everybody hates that we got a credit downgrade. All right. So it does this. Just to say it does this. You know, the next week, this week of June 2nd, and then June 23rd over here. Anyway, let's just say it does this next week, this coming week, and in the week after. You know for a fact that the sellers got the ball at 156, and where can the price go? The price can go all the way back down to 138, and that in this imaginary situation, that's exactly what happened. All right, so you know for a fact if you were in a winning position, you're like, oh, it opened up inside. It opened up inside. As long as it doesn't go below 156, I'm good. I'm good. All right, but once the price starts going below 156, nah, done. Take it. No. You ain't taking my money, or at least take some off the table. All right, and you want to talk about scaling out after that? That's okay. That's okay, because now you have a potential reversal to the downside, and you can see how far it can go, and it can take out all these targets. That's why we look at levels of reclaim, and you'll have a lot easier time, number one, working with broadening formations. It'll simplify your charts, and you don't have to have all these Fibonacci lines and key levels that you've heard everybody talk about. Yes. Yep. Mr. F2 Rev already said that. Yep. The reason why it works is because a lot of traders believe it works. Yes. So if everybody's looking at 0.618 as the, if it goes below that line, we're all buying, and it does that. Yes, everybody can go, yep, the golden ratio works. See, told you. But if you learn the strat, after you learn the strat, you know when it doesn't work and it goes to the downside, boy, we are cracking up. Ask Terry. Boy, me and Terry Baker, Ryan, Marlon B, we laughed at so many charts. Oh, where you think you're going? To the lows. To the lows with you. So that's why we look at levels of reclaim. All right, we know it's going back through these previous ranges. I know that was a really long answer to that, but I wanted to explain Fibonacci's and how that even came about, because I learned that this weekend. I thought that was really interesting. I put some tweets out there, and I got like 2 likes on these tweets because nobody wants to hear that crap. Anybody trying to hear that crap? Let's see here. What else you got? Any other questions about the strat? I got 30 more minutes, and I gotta go do some stuff. I'm thinking about some questions that I had from Terry, you asked about the outside, inside actionable signal. I have not seen one in a while. I have not seen one yet. So we will see. If you watched the weekend shift with JJ was talking about these islands. JJ was talking about islands. And islands are where the price, let's do this. Let's get some visuals. Islands are where the price gaps up or gaps down, and it just kind of sits. And it doesn't, it doesn't fill the gap at all. It just sits. That's called an island. All right. Now, sometimes those gaps do fill, and sometimes it takes a while for those gaps to fill. And some people mark those gaps. But those, where they're marking in between those gaps, that's an island. All right. You have a nasty little island right here. That's all chop shop right here. Island right here. So you want to see, these islands are caused by gaps. Once the market goes 24/7, I'm pretty sure you'll never see these islands ever again. All right, I don't think they have islands in cryptocurrency because it never turns off, which is really interesting. Systematic trading, people that do systematic trading are going to have a big advantage over people that don't. And they just they listen to some news, or they trade some in a different way, and then they're buying and selling off of that. Systematic traders, stratters, for example, are going to have a lot better time working with price action once it goes 24/7, because we won't have to deal with these gaps anymore. There will be no more gap list. You mentioned that if a sector breaks to the upside, for example, you would take trades in more than one stock in that sector. Yes. Terry got the good questions today. Yes. Weekly tech. Let's go see what the broader average is. So you can use this type of strategy with day traders or swing traders. All right, day traders and swing traders can use this same technique. Let's go to the multiple view here, because I want to look at the sectors. Let's just say tomorrow opens up, and we look at the week. All right. For example, this is just for example. Everybody opens up 2 up on the week tomorrow. All right, this is example. All right, so you're looking at your sectors. Okay, here's tech. All right, we got buyers in tech. We got buyers in utilities. XLE ain't doing too hot, but it is 2 up on the week. Look at biotechs way down here. Way down here. Yuck. All right, maybe ignore them. XLV healthcare having a very hard time, so I'm ignoring them too. Ignore healthcare. All right, now I'm talking about swing trading or day trading. This is the same technique that Rob would use. Weekly chart, okay, 2 up on the week. All right, we can look at some retail. And then shaking my head, semiconductors, 2 up on the week, okay. And then consumer staples, 2 up on the week. So we got a lot of buyers. We got buyers in these sectors. What you want to do is go, okay, tech is pretty strong. Utilities is a defensive position. It is working, but it's not necessarily gonna, you're not gonna have really large moves, and it's gonna move slow in utilities. So let's look at tech, let's look at XRT, and then maybe semiconductors. All right, this is an example. So we got 3 sectors we want to look at: tech, utilities, and then semiconductors. So you go back to your charts. In TrendSpider, you can type in tech stocks. You can type in semiconductors in this search bar up here. For example, there it is right there, semiconductors. If they were in banks, you can just type in banks. Like, oh, there's buyers in banks. Let me go to that. What I have done over the years is I've made my own watch lists for each of these sectors. These are the holdings for these sectors. Okay, so I'll go to tech. What I want to do is go to tech sector, and I want to take every stock taken out last week's highs. All right, every stock taken out last week's highs, I want to be in it. It's got to be 2 up on the day as well, So let's just make it simple. Let's go 2 up on the day. Anything 2 up on the day on this one? ACN, no. Adobe, 2 up on the day? Yes. All right, put it on the list. ADI, 2 up on the day? No, forget it. ADP, 2 up on the day? Yes. All right, ADSK, 2 up on the day? Yes. All right. Now, once you have AMAT, 2 up on the day? No, skip it. AMD, 2 up on the day? Yes, but it's red, skip it. All right. And you have to have it. We have to have that type of attitude. You can't go, well, most of tech is going 2 up, so I can, was it the rising tide raises all ships? No. I'm trying to make money today. I want to make money now. I don't have time to get in on this stock and then hopefully it starts working with the rest of them. No. Once I have my list, let's just say, personally, I try to go about 5, no more than 5. That's me. If you can handle more, do more. But if you're in tech and they're buying in tech and you trade 5+ stocks in that same sector, you will have a higher probability of making money, number one. And then number two, those stocks are easier to manage because you're only looking at one sector. You're looking at SPY and going, okay, 2 up on the week, 2 up on the day. They're buying this week, they're buying today. Looks like they're all in tech. Sector rotations, they're in tech right now. So I buy 5 or 6 stocks in tech. All right. Now, they're all in force. Of course, I look for reversals. They're in force right now. Now you have 5 winning positions. 5 winning positions as opposed to 1, sitting here going, well, maybe Roblox will be good. And maybe Roblox is good, but is it in a sector? No. Same thing with Tesla. Is Tesla in a sector? No. Okay? It's not. It's not in the sector. Same thing with Palantir. It's not in the sector. It's blowing up. It's going to the highs, but it's not in a sector. It's easier to manage 5 to 6 trades, or as many as you can handle, as trading in that same sector. All right, that's called trading a simultaneous break. All right, so now you got ANC, Adobe, ADI, Autodesk, and let's just say you got AVGO. All right. Then, while you're working those through the week, you have 5 winning positions. You're working those through the week. We create those winning positions, add to them, and defend them with tight stops. 2 of them, let's just say 2 of them are done. 2 of them stop out. They get to where they get, the buyers got what they wanted. They start reversing. All right, a couple days later. All right, so we made some money on 2. We got paid. All right, now these other 3 are still working. Then Thursday comes. This one's done. Let's just say Adobe. No, I think we said skip Adobe. Let's just say Autodesk. Autodesk is done. So now you kept pushing your stops up with the price. You made money on 3 stocks. Now you have 2 more still good. Friday comes, they're still buying. You can hold those winning positions over the weekend. Now you are starting the next week with 2 good positions. 2 winning positions, and hopefully they kept on going. All right. And then if they're still buying in tech, the process starts all over. But you're starting the week with 2 winning positions, as opposed to, those 2 stocks were good, and we're done with that. No. I'd rather when you're trading simultaneous breaks, you're going to where the buyers are. For example, they're in tech. You're going to create as many winning positions as you can in tech, and then manage those positions from there. It's so much easier to manage those stocks in that same sector than it is to try to find individual stocks in each individual. Well, maybe I'll try this and maybe I'll try that. No. Does that make sense, Terry Baker? Does that make sense to everybody else too? Don't let me ramble. Don't be like, like shaking your head, and then the whole thing's over, and you're like, I don't understand a word he said. Don't let me do that. Real talk. You got a question about the Strat? Come on now. Yes. Okay, good. And then so let's talk about, since we're talking about trading winning positions, let's talk about holding a loser. All right, holding a losing position is bad. I don't care what anybody says. Well, we have our invalidation level. It hasn't hit that, so I'm gonna keep holding it till it hits that. That's between you and your invalidation level. But I'm telling you right now, once that thing reverses to the downside, I am out. All right, done. All right. And now it's easier for me to do what I do because I trade stocks. A 2-2 reversal back down on the day doesn't hurt as much with stocks as it does with options. You're trading options, that thing starts reversing down, you need to take your money. You take your money, take your wins, be done. Wait for it to set up again. All right, don't let this stuff go like $300, $400 into the lows, and you go, well, it really hasn't hit my the 50% mark, so I'm going to go ahead and add some more. That's adding to a losing position. That's bad. Only losers average down on losers. All right. How do you buy your stock? How do you know the buyer's in tech? Okay. All right. Maybe you're in here late. How do you know the buyers are in tech? All right, so if, let's go back to all our charts here. You don't need to have all this right here, but if you had your monitors up, what you'd be looking at is SPY. SPY, this is an example. Now the week is over. This week, the data you're looking at is over. What you're, but once that week starts, so tomorrow when the week starts, you're looking at the weekly charts on SPY, Dow Jones, QQQ. If you can only handle SPY, just look at SPY. And then you got your sectors. If it's 2 up on the week on SPY, you're going to look for all the sectors that are also 2 up on the week. Here's XLK, this is XLK, that's tech, 2 up on the week. There's buyers in there. XLU, there's buyers in there. XLE, it is 2 up on the week, but it's red. All right, Labu Biotech's inside, or 2 down on the week, ignore it. Healthcare, is that 2 up on the week? No, ignore it. XRT retail, all right, we can look at some retail if you want. That's okay. That's good. That's good. And then semiconductors. All right. I know you guys just saw this, but I'm doing it again for Super Pop. Yep. So that's how you know there's buyers in tech, because the price is continuously moving up and it's trading above last week's range. Okay. That's how you know there's buyers in there. Then you're going to go down your watch list of all the tech stocks that you have. All right, if you want this list, I can give it to you. And you're going to only trade those stocks that are also 2 up on the week. All right. If it's not 2 up on the week, you're ignoring it. So far, lots of green, right? Lots of AMAT. AMAT. That ain't green. Ignore it. All right. 2 down on the day. Nope. Not touching it. AMD, it is 2 up on the week. That's good, but what's it doing on the day? Red, ignore it. Move on. That's how you know there's buyers in tech, and that's how you know there's buyers in a stock. If it's 2 up, if it's 2 up on the month, 2 up on the week. Now let's look at the day. Is the day reconfirming what we're seeing on the week? No, it's not. Are the 60s reconfirming what we're seeing on the day? Not really either. Just kind of traded sideways on Friday. This is Friday. All right. So this process starts all over again tomorrow. So you have 2-2 reversal back up on the month on AMD. That's good. Where does it open up tomorrow on AMD? More than likely, it's going to open up inside week. More than likely. All right. So you're not going to touch it. You're going to wait. But they could still be buying on the day in the 60s. Hey, there's a JMac in there. Okay, very cool. At some point, a small time frame candle with a Strat signal starts a reversal against larger time frame continuity. How small of a time frame do you feel comfortable with trading? Weekly charts. Do not let these other people try to get you into this domino effect stuff. You will lose more trades messing around with domino effect than anything else. You will. Why? Because they're not looking at time frame continuity. They're not looking at time frame continuity. What's time frame continuity? Time frame continuity lets us know what the institutional buyers are actually doing. It's very hard for the institutions to hide that they are buying Adobe. 2-2 reversal back up on the month. It takes a long time for them to buy thousands and millions of shares in Adobe. That's why we look at our monthly chart. We also look at the weekly chart to see what's actually happening in here. All right. If you mess around with these other guys trying to do this domino effect stuff, trying to trade a 2-2 reversal on the 15-minute, that might trigger the 30, that might trigger the 60, that might trigger the daily, that might trigger the weekly, that might trigger the 10-year. You will more than likely always get yourself in losing positions. All right, because you're not looking at the month, the week, or the daily. And most of the time, most of these people are not looking at the 60s either. They're just taking 2-2 reversals or 2-1-2 reversals or 3-1-2 reversals on 15-minute charts. They're not looking at the whole thing. They're taking things against continuity. All right. Continuity lets you know what the institutions are actually doing. They're buying this on the month. Now, what you want to do is look at what's happening on the week. Is the week reconfirming what we're seeing on the month? Is the day reconfirming what we're seeing on the week? Yes. Okay, good. What are the 60s doing? Are the 60s really buying? It did that first hour and then it kind of fizzled out. Let me go trade something else, because they're not really buying Adobe, for example. Yeah, sorry about that. Sorry if I put too much stank on it, J-Mac. My bad. If I put too much stank on it, I'm sorry. I get that a lot. I hear that a lot. I do have another Strat Warrior. Appreciate it. Justin Davis, he's in here a lot, and he will take those contrarian trades as well. And I'm like, you got to look at time frame continuity. He's very good at saying, okay, once it gets to at the bottom of the bottom information on the daily chart, you know I can see where it's going to go. Okay, that's fine. But JD, you got to look for an actionable signal at least to go to the other side. Because if you're 60 and your daily, here you go, J-Mac, here's one for you. If you're 60 and your daily are the same color, you can take that trade. Because it's earnings season, for example. There are gap ups, there are gap downs, there's all kind of stuff, right? Let's look at Tesla. So if you're going to do something contrarian, this is full time frame continuity to the upside too. This is a bad example. But if it's red on the month, red on the week, and you want to take a reversal on the 60 and the daily, because this is moving now, like they're buying it now. Yeah, the week and the month were bad, but they're definitely working it now. You need to make sure that your 60-minute chart and your daily chart are the same color. Why? Because it shows that they're buying it today and they're buying it right now. Okay? All right? So that's trading something, but you got to realize you are trading something that's called in conflict. In conflict. All four charts are not reconfirming each other. All right? You're trading in conflict. Now, if you're going to do that, which is the same way we trade the gap list, make sure your daily and their 60 are the same color. Both green, go for it. Trade all you want and be like, hey, Strat Soldier, I made my money. Hey, I'm gonna be like, hey, you did it. Good. You good. That's a lot more effective than taking a 15-minute 2-2 reversal back up when you're, back to the upside, when the month is red, the week is red, the day is red, the 60's red, and you take a 2-2 reversal up on the 15-minute, think it's gonna save the day. Shoot, that may be the strongest 2-2 reversal on the 15-minute ever. Oh my goodness. Awesome. Good. For day trading, is the 60 and the daily the same direction good enough? Yes. I just said that. Thank you, Marlon B. I appreciate that. Thank you. He's tracking. He is tracking. Especially in earnings season, that's a very effective way to get in on something that's working now. All right. The daily and the 60, the same color. Do it. Same thing on the other side. It was at Google. All right, Google the other day when Apple was like, nah, bro, we ain't messing with you no more. We ain't messing with you no more, Google. All right, green on the month, green on the week, and then everybody got this news. Let me put this on the chart. We got this news that Apple was like, nah, we ain't using you no more. We're gonna do our own thing. It went straight to the lows. Straight, it started puking immediately. Everybody was like, I was looking at other stuff, and people were like, look at Google. Google's having a fit, to the lows. Now, again, it's green on the month, green on the week. You can take this to the downside. Let's go to the 60s. Let me blow this up. Nice shooter right there in force. You had to wait. You had a whole hour to wait for that. You're like, okay, there's a shooter on the 60s. What's the color of the day? It's red. It ain't really red, but it was red. All right, and then that shooter goes in force below $163.10. $163.10. Boom. All right, you're making all kind of money to the downside. Watching Google just puke, people just scrambling to get out of Google. That was amazing. And then it created a mother bar, and it got out of that mother bar pretty quick, which shows the level of strength of buyers on the month and the week. Okay, but yeah, that was nasty. I thought we would get stuck in that for a lot longer. But Marlon B, there's an example of, okay, it's red on the it's red on the day and it's red on the 60s. That means they're selling it today, and that means they're selling it right now. Right now, I'm working it, and and that's how you do it. Make sure you look for those actionable signals. Set your stops, and going back to Justin Davis, he was telling me, hey, I made $400 on this. I'm like, hey, you did it. Hey, you know what you're doing. I can't get mad at you. I can say you should have did this, and I can say you should have all day long. But what you did was you created a winning position, added to it, and defended it with tight stops and made that money. Yes. Got a couple more minutes here. Any other questions about the Strat? Now, I do want to say that I do this every, I'll say every, I've only been doing it for a few weeks now, but on Saturdays. So a half an hour before the weekend shift. Depending on how much participation that we get, we can also bump that back to 10 o'clock Eastern Standard Time, and have a whole hour coaching session and answer these questions. Usually when I do the weekend shift, I'm looking for actionable signals. We're in here joking about what we could have did. We're looking at we're making watch lists, and we are going over some lessons learned also. But for the coaching sessions specifically, but just like Terry Baker's like, hey, can you talk about decoupling? Can you talk about levels of reclaim? Like, that's what we're doing on the coaching sessions. We're really digging into the science of the Strat. I went a little long explaining Fibonacci's, but I thought that was a really interesting thing to learn. Here's a nice little example of levels of reclaim. All right. This is a great example of levels of reclaim. All right, here's your scenario 3 on the daily chart. Scenario 3 on the daily chart. Drop down to the 60s. There's your broadening formation. Nice broadening formation you got there. Thank you, Google. All right, and they took it all the way down, and they took it all the way back up. That's why we look at those levels of reclaim. All right. What did they do on here's their daily chart. They took it all the way down. It consolidated for a little bit, and then they got it all the way back up to the highs. That's why we want to mark those. We want to see where the price is going through previous range. That's so much more effective and quantitative than looking at Fibonacci numbers, just random numbers. That's what it is. It's just random numbers in a sequence. I do appreciate the idea behind it. You will get a lot further with these levels of reclaim. You will be able to talk smartly. You'll be able to say, okay, we're looking for a range between 147 and 165. That's the range we're looking for. Either it's going to go to 165 or it's going to go to 147. Well, how did you get that range? Let's go to the daily chart. This is what we call scenario 3. All right, that makes a lot more sense than, well, it went from the golden cross. It might get to this one up here. It might get down to this little fib land down here, and then you might sit here for a while, and come on now. Here's the range, 165, 147. Who's got the ball? The buyers or the sellers? So that's another reason why we look at levels of reclaim. A lot more effective. Great example there. Indicators. I used to call myself the indicator hater. It was fun, but Google TrendSpider gives us a lot of tools in here, a lot. And let's be real. A lot of people are using indicators anyway. If you master time frame continuity, you will not need indicators. I don't need indicators to know that Adobe. I don't need indicators to know that Adobe is going to the highs. All right, I don't. Because I know what time frame continuity is. To a person that is either new to the Strat or is really good at using indicators, and they just want to use the Strat and use what they grew up with, what they're used to, it's a lot easier to take trades and go, okay. What you'll do is you'll take your indicator and you look at the price, and you look at your indicator and go, okay, is the indicator reconfirming the price? Are they both going to the highs? Here's our market flow index. This measures price and volume. Are they both going to the highs? Yes. Yes. Now, if you had a divergence, which would be the price moving up, and what was it? Oracle. Let's go to Oracle. Let's go to a real example instead of me making something up. Oracle, OCL, Oracle. We go to Oracle. The price is moving up. We know that. But what's money flow index doing? I don't even have to draw it. You can see it. That thing, they was like, no, take my money out. All right. Get me out of this. And that caught us, and this is definitely showing some of this selling here, but the overall trend is still moving to the highs. But the money flow indicator is showing, hey, a big reversal could be happening soon. That's how you could use these indicators with the Strat. All right, I'm not teaching the Strat Plus, but I know people are using indicators with the Strat. That's how you use it. You want to use it to reconfirm what's actually happening. All right, Oracle is trending to the highs, but look at this thing, showing, hey, this a reversal could be happening very soon. All right, so we're gonna watch it. RSI, with RSI, I want you to remember that it's relative strength in the index that is on the RSI is only good for the stock that you're looking at. It does not show the overall strength of the entire market. That's a huge misconception. If you're looking at RSI, it's only for example, Oracle, and it's only for that one time frame. All right, I'm not using money flow index to look at overbought and oversold. That is something you would do with RSI. MACD. If you're looking at MACD, same type of situation. All right, let me see. I used to have it on my charts. I did have it on my charts for a while, again, something to look at. Then I found the money flow. So with MACD, you're looking, it has two exponential moving averages, and they cross, and that's when people want to either get in or get out. And then you also have a histogram at the bottom of that indicator as well. It's a momentum indicator that measures the exchange rate of buying and selling. Once the rate of exchange slows down, all right, you'll see those two exponential moving averages cross, and you'll see it move to the downside. All right. Once the buying and selling, the rate of exchange, you can also look at ROC. It's a totally indicator all by itself. ROC that also just measures rate of exchange, which they call momentum. All right. You want those indicators to reconfirm what you're seeing on in the price. All right. If the indicator's going down, you want your price to be doing the same thing. If it's not doing the same thing, hold on, pause, wait a minute. You don't necessarily want to use your indicator to look for buys and sells. All right, you want to look for just reconfirmation that yes, this is for real. All right, they're really selling the mess out of this. For example, any actionable signals for this week? Oh, this is not the weekend shift, Marlon B. I'll give you a couple. I did run some scans. I'm doing some more looking around. What I did do is I went through, is my 2 up on the month list, my monthly signals. Most of these are hammers. All right, most of these are 2 up on the months. Actually, all of them are 2-2 reversal back up on the month. There's hammer and force on the month. And I went through all of these. What I did was, in this monthly watch list, I'm looking for actionable signals on the week. All right. So now let's go to my weekly chart. These are the actionable signals that I found in that monthly watch list. Okay. Costco, Momo Hammer for next week, trying to get back through this level of reclaiming here on the month. They need to do a stock split. I know the hot dogs are only $1.50, but $1,000 for a stock, that's a lot. That is a lot. So hopefully they'll do a stock split soon. But the target at the top of this level of reclaim is $1,066.30. So let's see if it gets there. LMT, Lockheed Martin, we used to call this war machines. It's red on the month, but it is 2 up on the month. It did trigger and it just kind of come back down, kind of messy. It is hammer on the month. Now, not hammer and force, I almost caught myself. It's not hammer and force yet. It's trying to get back through this level of reclaim right here. on the month, excuse me, on the week, all right. Once it gets above, if that hammer does go in force, it'll get above, that hammer goes in force above 475. Once it gets above 477, here's your targets all the way up until the next level of reclaim, which is 531. All right, so you have all those targets to look for in that range there. So we'll see. We will see. Lockheed Martin, hammer on the week. AMAT. I did talk about this a little bit, but here's 2-2 reversal back up on the month, and you got a shooter on the week. This is a little nasty right here. Yep, get that off of there. Get it out of here. AMAT. All right, shooter on the week. If that thing goes in force below 161.97, the magnitude's going to be 151. And once it gets into this level of reclaim, it can get all the way down to 133. So, AMAT, are they done with applied materials? Are they done? I don't know. Again, if you are looking at indicators to look, because you're good at that and that's what you like, that's fine. You got some divergence here. All right, you have a 2-2 reversal back down on the day. Not necessarily. If you also trade trend lines, you can say, okay, well, you had your breakout. So we'll see. We'll see what they want to do here. But you definitely have some divergence here. All right, this is showing you that people are getting out somewhere. All right, they're getting out. Possible reversal to the downside. Now, indicators are lagging. Price is king. Price is king. All right. So that's just another way, because I know you guys are looking at indicators, so I might as well talk about it. And then CRUS also shooter on the week. 2-2 reversal back up on the month, but shooter on the week. All right, they could be done. They could be like, yeah, we got what we wanted. All right, and that goes in force at 104, and possibly the target's going to be $91.44. Now, if that really happens, that's pretty dramatic. That is really dramatic. That means they got what they wanted, and they taking their money out now. All right, cash out, cashing out. So we'll see what they want to do. All right, be careful out there. People talking about this credit downgrade. There's your divergence again. All right. Possible reversal happening in this. All right. And then inside on the month and inside on the week. All right. And usually it's the second. It's in the middle of the month. Usually when it's in the middle of the month, I ignore everything that's inside on the month. All right. But possible 212 reversal back down on you, and that goes in force at $24.08, and that can go all the way back down to this level. This target down here at $22.94, and then the second target after that is $21. So that could be something. Since we're talking about divergence. All right, we need to watch this. All right, somebody wants to buy this thing, and I don't know why. I don't know why, but they want to buy it. All right, so you got a little bit of divergence in there, so just be careful. All right, inside bars can go either way. Maybe you will take off to the highs. We're going to watch it. Okay, so that's all I really have for the weekend shift right now. I'll be working on this and adding to, and then once the week starts. Remember, once the week starts, I'm looking at, okay, did we go 2 up on the week? Did we go 2 down? Are we stuck inside, or what are we doing? And then I'll be adding to the weekly watch list from there. All right? Great questions. Great questions. Fantastic questions. Again, this is just the coaching session. Thank you so much. I did this for you guys because, I got like 5 super chats for the month. Thank you so much for supporting the show. Marley B, Ryan, always there, Mr. F2 Rev, Terry Baker in the house, and we got some new people. We got J-Mac, we got Super Pop, we got Real Talk, and I think that, yep, and then the Creole Kid. I know you've been here a couple shows already, but you're still new. I'm gonna call you new just so I can say I got new people in here. Thank you so much for all you guys' support and your help. You go watch all those other weekend shift videos. Watch the interviews. Go watch the one with JJ, the one with 8X, the one with charts. The interviews are really good. I like doing the interviews a lot, and so I'll be bringing. I try to bring those every month, once a month. It's fun to watch and see how other people trade and how people use the Strat. And I've also been talking to people that don't just trade the Strat; they trade other things. And then, but this is where I want you guys to get. And this is why I'm showing you guys things about indicators. I'm showing you things about Fibonacci's. I'm showing you things about traditional technical analysis, so that you can go. You guys call that an engulfing bar. We call that a scenario 3, and then both of you guys start talking trading ideas, and it starts to click, and either you show that person something or they show you something, and you can go, oh, okay, well, maybe when I'm trying to mess around with that VWAP, volume weighted average price, okay, I need to be taking that 212 up. It's a 212 continuation up. That makes sense. I can look for that. You know what I mean? And they can show you how they use VWAP and whatever. All right. But you'll have the basic knowledge of the Strat and then technical analysis, and then you can, you know, go talk to other people. You don't seem crazy, all right? You're not talking about fair value gaps and, you know, dangling participles and all kind of weird stuff. Order blocks. I'll bet you these people that go out and talk about order blocks with these guys that have been doing it for 30 years, they're like, ain't no daggone order block. We ain't doing that. Nice. That's a cute little theory about order blocks, but that's not what we're doing, you know? So anyway, interesting stuff. What I'm saying is I want you to be able to talk to another trader that has nothing to do with the Strat and be able to hang. You know what I mean? Be able to be like, you know, both of you guys are on the same wavelength. Like, yeah, that makes sense. You're like, you know, well, they're like, well, I keep averaging down on mine. You're like, no, I cut my losers and I add to my winners, and then maybe you'll influence them in a positive way. So thank you so much, you guys, for being here. I will get the recording up on YouTube. Thank you so much for all the questions. This was fun, and hopefully we could do it in June. Thank you guys, and go check out the membership section on the YouTube channel. I got the Weekend Shift crew. The Weekend Shift crew gets updates on the Weekend Shift watch list every day, and of course things that I've seen that happen in the market. They'll be like, hey, watch this. This is what's happening. We need to trade it like this. That happens every day on YouTube of the Weekend Shift crew, and then the higher tier is the Strat Warrior, and that's where you get these coaching sessions. The macro. I also do macro videos, and then any other personal one-on-ones, you know, we can do it there too. So anyway, go check it out, and go check out thestratsoldier.com. I'll talk to you guys later. Peace.